Good morning, everyone. Happy Monday. Happy Monday, Patrick.
Welcome, everyone. Happy Money Monday. Nice new week. So let's kick off strong. And yeah, I will say let's go.
Yeah, let's start with obviously the disclaimer as always, guys. A few seconds. All right. So I think today, Patrick, we're going to look at a few assets. In particular, we're going to focus on commodities. We saw, and what we're going to talk about is copper, silver, and gold primarily, and then we can answer any questions. But essentially, what we want to show you is how can you look at macro first to understand the price movement of a certain asset, and in particular the commodity. Last week we saw a very good run of gold and silver. We saw movement in copper. So first, if we look at copper, this is kind of like the historical chart over the past few months. So we see that obviously copper is in a downtrend, right? And this is also caused by macro events. So we see like the slowdown of the economy in China, bad results coming from the Chinese market. So that's affecting obviously the demand for copper. Then we see like monetary stimulus. So investors are expecting, China to step up their policy support and fiscal spending to counter like, deflation and economic slowdown. And then we see also some fundamentals, right? So coming mostly from China. So even though like the macro events are happening, what we can actually look is how can we look at the data and see potential price action that could impact you as a trader of commodities and so on. So the first thing, let's go back to our correlation. So we know that, and we touched on this last week when we were talking about blind spots. We know that there is obviously big correlations between stocks and commodities. We also see oil and currencies, and these are like some of the big correlation that we touched base on last week. So if we go back to copper, like how can we get data to understand what's going on there? So the first thing we want to do is we want to look at the CTA model. So we do the CTA model on all the commodities and indices and asset currencies and so on. So you can come right here within the premium membership under CTA's model, scroll down to the latest date, and here we see our copper chart. So as you can see, basically, the white line is the price of copper and the green line is the CTA positioning, right? So we saw a big sell-off right here from both from the CTA model as well as from the price. So obviously CTAs tend to accentuate the levels, tend to accentuate the price. So always look at the CTA's model here, and we can also do the same thing for treasury, natural gas, gold. In this case, we see there was a spike in positioning here on gold last week. We have silver, we have oil, and then we also have our tables. So if we look at our commodity table here, we can look at our copper right here. So you can look at the positioning today versus yesterday versus a month ago. So you can see how things are changing, right? So very, very useful. Then we can go and look at the levels, right? So we can move to our intraday chart. Let's do 15 minutes. And then we can start plotting the levels here. So if we look at the levels from last night, we see obviously a big move around the high vol level 0 DTE. So this has been a magnet for the session. Right here, we couldn't break down. We tried here, we moved up, and so this is very as money, as you always say, money printing level, very, very important one. But then what we can also do is, I think Patrick, you were looking at that, going back also in time and looking at how things have changed in copper over the past few days. So if we look at our option matrix, we can see basically that if we go all the way back to the 11th, so this was the 11th, we see kind of like a change from kind of negative to positive gamma here, right? So we can also do the same and go forward in time and see how things have changed over time. And I think the 11th or the 13th, Patrick, were the moment where we saw kind of like the start of a like correction, right?
Yeah, on the 12th. On the 12th, we get the correction. And then we see this also. So if we look at, so what we want to see in the options matrix, why the options matrix is so useful for us, is we can see when we see a shift in the market. So if you can go back to 9/11, so now we have this. What we can see, maybe go back again to the options matrix, 9/11, please. And what you can see here, and this is very, very powerful. So you can see we have positive gags and negative dags. And this is something where we have to take our eyes on when we see positive gags, negative dags. What is this meaning based on the market maker? So we was giving the answer in the community. There's a PDF file. Everyone we was looking into this. We're giving our knowledge. Jason was covering this for us, for the community members. It's there. You can find this. And what we can see is when the market is shift, when we see positive gags and positive dags. And this is something where I'm personally looking into. And therefore, the options matrix is one of the best tools what you can have. This is your best friend. Look at this. Now we see the shift from negative dags to positive gags in total. And we see also how they built his position. And this is very powerful. And this is what happened on 9/12. And if we're looking now where we are now on the Cooper, this is crazy. If you hold your position, amazing. So we see the shift, and this is something what you should always looking for. If you be a Cooper trader, you need the options matrix. You see how the options matrix is changed. Is there a shift? Is there a shift from positive gags to negative gags? Is there a shift from positive dags to negative gags, and so on? What is this meaning? We're giving you the answer in the community, and this is something where you should be always looking for. And crazy if you're not. Maybe you share, maybe really quick, my trading view chart for the people. Then we were speaking about the correlation, the positive correlation between the indices and the commodities. Now, what I was doing plotting the NDX levels, the swing trading model levels from NDX on my chart, and then we can see how the bands was working out. So we go from lower band to lower band, from lower band, and now we're going to the upper bands. And this is really crazy. What we can see now, we have a good points where we can possible targets based on the swing trading model levels. So if we hold this, if the trend is strong, if the momentum keeps pushing, so we have good target areas. Why could this be really good target areas? I give you the answer, because as we can see, the levels was really respected. Lower band was respected. Here it was respected. And the first risk trigger from 910 was hitting. So now let's take our eyes on 911, the risk ticker for 911. So 435, this will be our next target based on the 5-day swing models, and I will see if this will be happened or not. But think about, we have also our gap fill strategy based on our Fibonacci principle. Map this out, have this on your line, and here we go, boom. This could be the first area where you should be taking an eye on. I think this is very powerful to know, Fabio, and I'm happy to share this with you guys.
Yeah, absolutely. Thank you, Patrick. So again, we are combining different tools available, and this is a great insight. I think if we can move back to our charts, let's shift to gold. So last week we saw obviously gold reaching all-time high. Now the banks are like increasing their targets, so they are already talking about $2,900 as a potential target. I think we are in a very congested area to break. And as you can see, if we look at the levels, we can also add our blind spot levels here. Right now, the price is pinned around the core resistance 0 DTE and gamma wall. So let's see what happens there. If we look at gold, we can also do the same analysis. And I think one thing we can also look for is the net jacks multi-expiration. So we want to understand how the market is positioned at different expiration in the future. So as we can see, we see a lot of like green bars. So that means that positive gamma exposure compared to negative. We see the levels of 2620, 2610 for the 0 DTE for the next actually September expiration, and then we have our 2640 for the September 27. And then here we can see further expiration. We have November, where our core resistance is at 2550, and then we have October, where our core resistance is at 2650 here. All right, let's do the same thing for silver. So we open the silver future. And we see a similar story. The price kind of like broke over the core resistance 0 DTE. Now it's kind of pinned right here. Let's see what happens at the open. And those are the level. And we can do the same exact thing here. So if we go to our net jacks multi-expiration and we do our SC Z2024, which is a December contract, here we see some negative jacks positioning on the September 16 expiration right here at these levels, and then here you see the data for the next 4 expirations.
Yeah.
All right.
And again, I cannot stress this enough. So as you were showing us on your trading view on gold on GZZ, so what was the main trigger from today? The money printing level, high wall, high wall, high wall, high wall. Everything is about high wall. If we're hitting high wall, boom, it's perfect. So, and here on the blue line, so we see this below the call resistance. So this was always the trigger. So we were starting with high wall. It was not today hitting, but based on this, you can see how this was acting. It's below call resistance on 2,545. So this was the area where we get starting. And I cannot stress this really enough. So if you come into some area where we have high wall 0 DTE, so take attention on it. There is most of the time some really nice price action. Maybe not, you cannot see it directly, but this will be happened. And we see this so often. We can go to the Nasdaq, we can go to the ES, we can go to any ticker. Every time when something has happened on high wall, if we touch the levels, there is some price action.
Yeah. All right. Any question, guys? We have a couple of minutes.
In the moment where people was typing something in, Fabio, I will say, go to our community and let's speak about for 1 minute, 2 minutes about what we're covering in the macro. So you were speaking about the macro side, but we have also Tim. He will show up, I think tomorrow, for the live. He will come also tomorrow live at 4 p.m. Eastern. This will be an amazing session. But he also covering very, very great stuff in the macro space. It's available for everyone who was on the premium subscription. He gives his feedback for us or for me. He is our MenthorQ Bloomberg terminal. He's so great informed. It's amazing. And yeah, so he gives a really good overview, and I'm 100% sure he was writing something about gold. He was writing something about Cooper in the past, where you can also get the information why something was happened. And if you combine this with the options matrix or with our other MenthorQ tools, what we giving you, you should take take advantage of this, because this could be changing your trading game.
Yeah.
Sometimes, as I said always, sometimes we need only one little tiny puzzle piece, and this could be one of the pieces where you're missing.
Yeah, and tomorrow, as we said, we have a live event at 4 p.m. To prep for the FOMC days. We're also going to have another FOMC meeting event on Wednesday, but tomorrow Tim will be live with us. He's going to share his macro view on what we expect could happen on Wednesday. So please stay tuned. Follow us. You'll find the event right here on the live session, or on Discord. You'll find the link. But yeah, it's going to be a good week. Very, very busy week for us.
And maybe Fabio, we can squeeze him, because he was doing amazing analyzing. Maybe you can show this again. I think it was also pinned or something like this. He was doing amazing analyzing about crude oil, how you should analyze crude oil. This is amazing stuff what he was writing down. This is a handout for every crude oil trader. You should not miss this. And I will be also live tomorrow 4 p.m. and I will promise you, I will read this again today and write all my notes on this, and I will squeeze you. I will squeeze you. I will squeeze him for his analyzing about crude oil, so that everyone can take an advantage of him. But yeah, I will say, if you want the comments from EarlCL, how you should analyze this, how Chester see this, how he doing amazing trades based on his crude oil trades. Yeah. This is your handout, and there are some huge stuff what we deliver you as a premium member.
Yeah. All right. Okay. So I think this is it for our 15 minutes, Patrick.
Yes,
we're going to be back later today. So later today, we're going to have a session on mindset. So please don't miss this. It's at 2 p.m. Eastern. And for any questions, please send us an email. Join us on Discord. Join us. Sign up for our mailing list. We send a daily newsletter as well. So yeah, hope to see you inside.
Yep. Have a good day, my friends. Happy trading. Happy Money Monday. See you later on the mindset session. This will be amazing.
Absolutely. Thank you, guys.
All right. Bye-bye.